What's going on, guys? It's your boy Tyler bringing you fundamental news on a fundamental basis. Today's article is brought to you by Routers. Wall Street eyes higher open after jobs data, and the debt default has been averted. US stock indices eyed a higher open on Friday after data showed a moderation in wage growth in May, boosted by bets that the Federal Reserve will keep raising rates this month while the country averting a debt default added to cheer. The Labor Department's closely watched employment report showed unemployment rate at 3.7% in May against a forecast of 3.5, which means unemployment is growing, guys. And unemployment is one of the tools that the Fed looks at when they take into consideration if they should stop raising rates. Because if the consumer is feeling it, then why raise rates? While average hourly earnings were at 0.3% down from 0.4% in April, highlighting a cooling in wage inflation. Non-farm payrolls increased by 339,000 jobs versus expectations of 190,000 additions. There is a reflection of a labor market that, while still robust, is softening gently, not rapidly. That's exactly what the Fed would like to see, said Art Hogan, chief market strategist at B. Riley Wealth in New York. The Fed wants to tame inflation without crushing the jobs market, and this is another piece of evidence that they are actually well along their way to getting that accomplished. The data brought relief to investors who now expect the Fed to skip an interest rate hike this month for the first time since starting its aggressive policy tightening more than a year ago. Fed funds futures trading showed an over 70% probability that the Fed will hold interest rates steady at its June 13th to 14th policy meeting. Also lifting the mood, the Senate passed a bill late on Thursday to lift the government's $31.4 trillion debt ceiling, avoiding a catastrophic first ever default at 10 to 9 a.m. Eastern Time. The Dow E-minis were up 183 points or 0.55%. S&P 500 E-minis were up 17.25% or 0.41%, and Nasdaq 100 was up 25.5 points or 0.18%. Lululemon Atlantica jumped 15.1% pre-market upon raising its annual sales and profit forecast on Thursday as wealthy Americans bought its pricey activewear despite high inflation. This helped boost shares of sportswear companies in both the United States and Europe, with Dow Jones Industrial Average component Nike up 3.4%. Germany's Adidas and Puma rose around 5% each in European trading. Broadcom dipped 0.1% after reporting a quarterly results. The chipmaker forecast third quarter revenue above market estimates. However, analysts said the outlook was disappointing as expectations were stacked up against a blockbuster guidance provided by Nvidia. Nvidia Corp last week. Shares in Nvidia, the world's most valuable chipmaker, rose 0.7%. Okay, guys, you have it. Employment numbers have risen by 339,000 jobs versus expectations of 190,000, which means the labor market is doing good. We should expect the Fed to decrease interest rates now in June, or at least have a pause. So let us watch clearly what the dollar index shows us in the next couple of days, in the next week, I mean. But so far it's shown us a double bottom, but it's still within a downtrending trend line. So if we can break that downtrend trend line, then I'm pretty sure we should see the dollar index go to 105, which is the next resistance. There you have it, guys. Don't forget to like and subscribe and tell your friends.